Hello friends, hope you all are doing well. Let's start today the second part of the introduction of bookkeeping and accountancy. In earlier part, we have already seen what is bookkeeping. Today we are going to see the second part of this, that is we are going to focus on the accountancy concept today. What is accountancy? In last session also we have discussed that accountancy is something an advanced level of bookkeeping. Bookkeeping is something just recording into my books of accounts in the systematic manner, and it is an art of recording the transaction. So today let's see what is accountancy. What's an accountancy? Accountancy refers to the entire body of the theory and process of accounting. So it's a entire activity, right from start to end. Whatever I am doing, it is an entire activity of accounting. This is the definition given by a theorist named Kohler. Let's see one more definition which is given by American Institute of Certified Public Accountants. The institute gives the definition as the art of recording, classifying and summarizing in the significant manner and in terms of money, transactions and event which are in part at least of financial character and interpreting the results thereof. So I have just read the definition. I will explain you. Listen carefully. The art of recording, classifying and summarizing. So what these three words are meaning? First of all, it is an art how we are going to record the transactions. Then while recording, before that we need to first of all classify these items. So when I record a particular transaction, I need to have its classification first. And classification also involves the summarizing. So when I summarize, I can record my transactions properly. Recording, classifying, summarizing shall be done in a significant manner. What do you mean by significant manner? It should be done in the most proper method because it is going to involve the financial aspect of my business and it should be done very much correctly. Further it says in terms of money, transactions and events which are in part at least of financial character. Means first of all it is clear, we have seen in bookkeeping also that we are just going to record the financial transaction. So it is in terms of money, transaction and events which are in part of at least of financial character. So this entire phrase means the same, that we are going to record only financial aspect, nothing else. And then we are not just going to record, as we have already discussed that accountancy is one step ahead than the bookkeeping. So bookkeeping plus something is equal to accountancy, and then this something is what? We are going to interpret the results what the bookkeeping has given to us, what this recording has given to us, and then this interpretation can be called as an accountancy. The entire process right from recording till the interpretation of the results. So it involves the computation of results as well. Then this entire process can be called as an accountancy. Let's move further. What are the features of accountancy? It's reliable document or it's reliable books of accounts. There is the 100% reliability on it. So it should be prepared with the utmost carefulness. Then it is relevance, because it is relevant to our business. So it's having relevance for each and every person who is going to refer such books of accounts, because we have already seen in utility part of the bookkeeping, there are many people who are having the utility to the books of accounts. So it's relevant to them. Understandability, it should be understood very easily. Then comparability, as we have seen that we prepare it today, we create an evidence and it can be compared in future with the other books, or we can compare it with some other businesses as well. So the comparative lies in the accountancy as well. Next, What are the bases of accountancy? So we have technically three bases. First of them is cash basis. So whatever transactions are actually happening in the cash or equivalents of cash, like through banks, through online transactions, whatever these activities are there, they are called as a cash transaction, cash basis. Then accrual basis. What is accrual basis? The transaction is done but no actually cash or cash equivalents are exchanged. Like I have sold goods but customer has not paid me immediately. Customer has asked me the time period of 8 days for payment. So it means the transaction is not cash in nature, it is credit in nature. So I have accrued that particular amount but I have not received that amount. Then cash is not received but then too I record into my books of accounts, so it is called as an accrual basis of accounting. And then I have the third method, that which is called as an hybrid method. What is this hybrid method? Hybrid method is something which says I use cash basis as well as accrual basis combination, something which is called as in fusion, when I mix more than one basis of accountancy, that will be called as an hybrid method of accountancy. Whenever required, I use cash basis, otherwise all transactions are recorded on accrual basis. So these are my three bases of accountancy. That's all for the accountancy concept. I hope you all have understood everything. In case of any doubts, you can just reach me on to the given links. Thank you for the day.